So today, not only am I going to be sharing a new trade idea with you on a Forex pair, so this is actually going to be a trade that I'll be taking for myself and hopefully making a good amount of profit from. I'm going to be walking you through the step-by-step process of exactly how I came up with this trade idea, so you can learn how you can find trade ideas just like this one for yourself. Okay, so today, like I said, we are going to be doing another analysis video, and this is going to be a trade idea on a Forex pair. Now, to anyone who is new to the channel, my name is Morgan. I'm the director of MS Equities Trading. I train students in about 28 countries around the world, but I also run my own capital management group where I manage portfolios for my clients in the financial markets. So I not only teach people how to trade, I also trade in the financial markets. I trade currencies, commodities, stocks, and indices. But for this video, we are going to be doing a Forex trade idea, and it's going to be on the euro pound. Now, this is an interesting trade idea. It's quite a simple trade idea that I've been looking for. At the moment, I've been looking at how the European market has been experiencing a large amount of oppressive weakness to their currency over the last year, following on from the previous year where in 2017 the euro was a very, very strong currency and a very well-performing currency, and then the tables got flipped when the US dollar started strengthening. There was a huge amount of stimulus. This was actually a trade idea I sent out in, I think it was in December. I'll put up the thumbnail right here to it, but it was a trade idea we got absolutely perfect. It was an incredible trade idea where we were able to correctly predict it. But now we're looking back into the future and we're having a look at if we can spot something on the euro pound. Now, it's not going to be such a big trade idea, but it's going to be an interesting trade idea nevertheless. Now, just to remind you, this video is for educational purposes only. It's only to show you exactly how I found this trade idea, the analytical process that I use behind it, as well as what I'm going to do with the idea. It's not that I'm trying to give you investment advice or give you any sort of persuasive advice either. So for this video, like I said, we're going to be breaking it down. We're going to be showing you how I analyze this trade idea, and I'm going to be taking you through the step-by-step process of it. So we're going to get onto the charts, and I'm going to show you just the technical analytical strategies that I make use of. I'm not going to be going into the fundamentals, the macroeconomics, anything like that. This video will just be way too long. So let's jump onto the charts, and I'm going to show you a few things that I make use of to come up with my trade ideas. Okay, so on the charts here, we're going to be just breaking it down quite simply. We are on the hourly charts on the euro pound, and we have three different indicators open. We have the MACD, the stochastic, and the MFI indicator. Now, to anyone who doesn't know what these three indicators are, to the MFI indicator, it's a very special strategy we use called the MFI strategy. You can watch this thumbnail right over here to learn about exactly how to use the MFI strategy. For the stochastic, if any of you don't know what the stochastic is, you can also watch this video right over here. That video is going to be telling you all about how to use the stochastic. So in this video, I'm not going to be explaining how to use them. I'm just going to be explaining why I use them. For the MACD, we're going to be bringing out a video quite soon. So stay subscribed to this channel and you will get access to that video very soon. But back onto the charts. So on this, basically, we're going to be going onto the daily charts, where is mainly where I spotted this trade idea. And in terms of this trade idea, the main thing I came up with was initially having a look at the Bollinger Bands. So on the Bollinger Bands, we don't have a video up yet either. Now, on these videos that I was going to be uploading, I was actually going to be doing it last week, but unfortunately I fell ill with a very bad chest infection and wasn't able to talk very much. Now that I'm finally back, we're going to be doing the videos this week. So like I said, stay subscribed. The Bollinger Band video will be out very soon. But in terms of what we were looking at is I was identifying a possible range that was forming up over here between price action. Now there are two very distinct ranges that we are able to see here, where we've got a lower price range right over here where we can see price action is forming between these two levels. So you can see over here, we've got price action that's forming up really, really nicely over here, forming a really nice support and resistance range. But then over here, we've got something very interesting that's forming up as well, where we can see that there's a very strong level of support and resistance forming up here. So we've had a breakup just above that support and resistance, as well as a pull straight back down to the downside. And as you can see over here, previously we had a breakout to the upside, followed by a pullback. We had another breakout to the upside, followed by a pullback. But as you can see, after we have these breakouts, which you can see occurring over here, you can see there's one breakout here, there's another breakout here, and there's another breakout occurring here. Now this breakout is rather small, but once again, this could be something that helps us identify that we are still going to be seeing volatility following on after that. Another one that I can mention to you here, let's just actually get rid of some of these indicators. It actually makes it a lot easier for us to see this price action. I'm just quickly going to delete the MACD for now and bring these down. So what we're going to be seeing here is that inside the Bollinger Bands, you can see how with the Bollinger Bands, it helps show us the expansion of volatility. We can see how back in this time right over here, we had two perfect levels where we had price action move up, come straight back down, move up again, and come straight back down. But you can see how the Bollinger Bands have expanded quite wide compared to over here, where you can see there's just one single strong uptrend, and the Bollinger Bands are closing up quite well. So you can see also back in the past, if we go back over here, and this is the difference I'm talking about. The difference in size between the Bollinger Bands that are indicated, I'm just quickly going to use a arrow right over here. So you can see how small the Bollinger Bands get over here compared to how big the Bollinger Bands get when they are starting to move within a range like over here, or let's say, for example, further up. So that's going to be another tool that we're going to make use of, is the expansion of the Bollinger Bands allows us to realize that there is a heightened level of volatility. So there's more price movement moving through the market right now. There's more erratic movement. And what that could see is that we could see a very strong bounce off this level and possibly a move back to the upside. Now, if we have a move back down to the downside to the previous range, so we can call this range number, let's call it range number 1, range 1. And if we look up over here, let me just quickly copy this. If we look up over here and we call this range 2, what you're going to see there is that we're now stuck within range 2, and our intention is that we want to see price action move possibly up back into this range over here. So that's obviously what we want to see happen. But now the possibility that price action moves back down into this range over here is still there. Obviously, it's not something that we want to happen, but it's definitely something that could possibly happen. Now, if we have a look and we discuss what the stochastic is able to do for us, that's also what we can have a look at. So if we have a look at the stochastic, which is this upper indicator over here, we can see how price action has become incredibly oversold in this level. So if we have a look previously, what's happened when the stochastic has become oversold, we can see back in this level over here, back in this level. We can even go back over here when price action was a lot more erratic. We can see how after periods of it being oversold, we've got strong recoveries in price. Now, we have had periods in time where the price hasn't recovered very far and has actually pulled back, but that's what we would be able to do. We'd be able to get in on our position, set a stop loss as the price recovers, and if price comes back down and hits our stop loss where our entry point was, we get out of the position and we wait for something. But if we see that price action decides to recover all the way back up to the top, we're going to see a very good move. So this range, the size of this entire range is about 240 pips, 250 pips, give or take. And that's really what we're wanting to look for. So in terms of having a look at the daily charts on the stochastic, we can see that the daily stochastic is very oversold. But now if we move into something like the weekly charts, let me just quickly move these red lines away for you. The weekly charts also help us identify that the stochastic there is also in a level of being oversold. So as you can see previously, we've got levels right over here where we've got price action move way down into this far oversold level, level 10 oversold. Like I said, stochastic video, you can have a look at that to understand what the stochastic is used for. But as again, we are back to level 20 over here. So even on the weekly chart, we are very oversold, and we can see over here how we've got this really strong range of price action just jumping between these two levels. Now, effectively what I mean by having a look at the bigger time frame is that the bigger time frame is going to show a stronger level of momentum. Let's say, for example, the daily time frame says it's oversold, but the weekly time frame says it might be a little bit overbought, while the daily time frame might be overwhelmed by the momentum of the weekly time frame. But what we have right over here is the daily time frame is oversold and the weekly time frame is oversold. That is a good confirmation for us to make use of when we want to decide if the stochastic is a strong confirmation for us to make use of if we think that the price is going to actually pivot and recover. Now, once again, this is not something that is incredibly easy for us to predict. It still is down to a form of discretion of you deciding if you feel that is a good trade, it is a good trade idea or not. Back onto the charts, another one that I also have been able to make use of is the Bollinger Bands on the weekly chart as well. So as we can see in the Bollinger Bands, we have price action that every single time it comes back down to the lower levels over here, we've got to bounce back up to the top. As we can see over here, previously when we had moves back down to the Bollinger Band level, we had a strong break over here, which could possibly happen, but that is still not very far beyond where current price is. So it's not going to be too bad for us if we see price move back down to this level. But we are still close to testing those Bollinger Band levels. But if we go back into the daily chart, we can see how we are very close to testing those Bollinger Band levels. And as we can see previously, every single time we've tested those Bollinger Band levels, we've had very strong bounces. So if I make use of these rectangles, these little squares, to show you exactly where they are, if you have a look over here on all these points, you can see how when we've tested the bottom level of these Bollinger Bands, we've had a really nice strong bounce in price. So as you can see, we've got a nice formation. We have got how price action is piercing right above that resistance level, then coming back down and bouncing a few times. We have got a support level that is supporting where the current price action is. We have got the stochastic confirming our price. We've got the Bollinger Bands confirming it. We've got two different time frames. And what I'm basically making use of here, and this is what you're going to see in this process of how I analyze the charts, I want to try and add as many points to my trade idea as possible that points towards the success of the trade. So what that basically means is, let's say, for example, I have 25 points that tell me the price is going to pivot and move in a bullish direction. I want to try and buy into that trade idea. I want to try and buy in at whatever that price may be and hold that position until I've made enough profit to get out and take my investment home. Now, that is something that you have to make use of as well, but something that I notice many traders do is they won't add too many points to that trade idea. They might see one or two things that they like and think that that's enough for them to get into the trade. Unfortunately, as a trader, you have to work hard for your money. You have to try and find as many points to confirm that you are right, because at the end of the day, you can very easily be wrong. Any of us could be wrong. And that just shows you a breakdown of how I'm looking into this trade idea. Now, for this trade idea, I've already added in a long position on all of my portfolios. So I'm long on all of the funds that I currently manage, and I'm on low exposure. I can't emphasize that word enough, low exposure. So on this position, I'm looking at making anything between 0.5% to 1%, which is very conservative. It's a lot more conservative than most retail traders would want to make, but for myself, I'm a professional trader. I manage money for clients, and for them, making 10 to 20% per year is more than enough for them. So I don't need to worry about making 50, 60, 70% every single year. So that's something that I'd also say to you to focus on, is try not to use too high exposure if any of you are going to take this trade idea. But once again, this has to come down to you deciding that you want to take a trade idea like this. It's not because I'm trying to recommend it. The only reason why I'm putting this video up is for educational purposes. But once again, to anyone who wants to actually find out a bit more about what we do at the MS Equities Group, like I said to you, I train students in over 28 countries around the world. I built a very specialized online training system that is not only accessible through the internet, it's also accessible through mobile apps for Android and iOS, which allows my students to study at any time throughout the day, 7 days a week, 24 hours a day. On top of that, we have coaching programs where these students are able to access the programs and study with us. Now, one thing I must say is the previous video I uploaded right over here was telling everyone about the fact that we only have 8 spots left to our latest promotional discount, where we did an 80% discount, a huge discount, and we gave away 60 seats to students based all over the world. Now that is only going to be 8 seats left, which is probably going to be done by the end of this week. After that, we're going to be going back to the normal price of $850 per student for 12 months of training. So to anyone who wants to try and apply to that program, if we still have spots available, email study@msequitiestrading.com, or you can go onto our website www.msequitiestrading.com and you can review our entire website, what we do, how we do it, and why we do it. Once again, everyone, thank you so much for tuning into this video. If you liked it, give it a thumbs up, that always helps us. And make sure to subscribe to this channel because we are uploading weekly educational content about trading and investing. So if you want to keep updated, you're always going to have the videos popping up on your notification bar. Once again, everyone, thanks for tuning in. I'll see you in the next one. Cheers for now.